Welcome to Weaver's Specialty Tax Spotlight. I'm Sean Muller, and Ralph Morales is joining me today. How you doing, Ralph?
I'm doing well, Sean. Thank you.
All right. Well, we are going to talk about bonus depreciation. So, we're ready to dive right in?
Ready to dive right in. Another favorite topic.
Great. Well, what is, bonus depreciation? There's all sorts of talk about it and different issues coming out. It's talked about, Congress talks about it, tax extenders. What is bonus depreciation?
Well, bonus depreciation, technically 168 little k of the code, it's been around for a long time. It's been around for, years, over a decade. And what it allows taxpayers to do is to immediately expense a certain amount of the basis that they place into service for eligible property. And throughout the years, it's changed from, we've had 30% bonus, we've had 50% bonus, we've had 100% bonus. And it's a way for Congress, back when it first came into play, to incentivize taxpayers to purchase eligible property, right? That was the intent of bonus depreciation, was really to spur the acquisition of property. And now we're in a unique period in bonus depreciation that we've had before, to be honest with you. But as part of the Tax Cuts and Jobs Act, 100% bonus came into play. And that's been around now for a couple of years, but it started to phase down in 2023.
So what types of property qualify for bonus depreciation?
So really, bonus depreciation is meant to apply to property that's got, because if you look back again at the incentive, right, to incentivize the purchase of machinery and equipment was really the intent of this. So it's property with a recovery period under 20 years. So that's your tangible personal property, machinery, equipment, furniture and fixtures, land improvements falls into that as well, since it's 150% declining balance, but it is a 15-year asset, most land improvements. Again, most assets that have a recovery period of under 20 years are eligible for bonus depreciation. The other one that, if you recall, Sean, there was a big discussion about the draft fix, right, for qualified improvement property. That's another one to keep in mind as well. So if you have if there's a client out there, a taxpayer that owns a building and improves that building, so QIP property after the building's been placed in service, that property may also be eligible for bonus depreciation as a 15-year asset.
Okay. We'll talk about qualified improvement property on another episode because it is a big issue. But
it is.
Is there exclusions to what's not eligible for bonus? I think prior to TCJA, it was only original use property, right? So you couldn't go buy a piece of used equipment, but they changed those rules, right?
That's a great point. So used property is eligible property. So it no longer doesn't have to be original to the taxpayer anymore. A taxpayer can buy used property and it's still eligible for bonus. I think the big one, really, the exclusion is foreign use property. So if you have to use ADS, mandatory ADS property is not eligible for bonus depreciation. If you place property in service with a recovery period of under 20 years and you use it predominantly in the United States for that year, it should be eligible for bonus depreciation.
Are there any taxable income limitations or anything like, Section 179 has a taxable income limitation? Any limitations around that?
No, and that's why bonus, in my opinion, is a little bit more flexible than 179 because there aren't the dollar thresholds that you have with 179. So there is no limitation.
Okay, so you mentioned the various levels of deduction, 30%, 50%, 100%. Currently, we're not in any of those percentages, and it's phasing out over the next few years. So could you walk through those phase out percentages?
Absolutely. So it was 100% through 2022. Last year for 2023, it scaled down to 80%. So it's going down 20% until it hits zero. It is basically the way the provision was written. So for 2024, for this year, we're at 60% bonus. Next year, we'll be at 40, 20, and then zero, unless it gets extended. So it becomes ever more important to, just keep in mind what your placed in service date is. And maybe that's another subject for a different day. But yes, we're scaling down 20% a year.
Okay. And so we're not politicians, but what are the chances we think of extension of this when it runs out?
So again, this isn't without precedent. There's been years where bonus depreciation is close to going away, and Congress has stepped in again, because the provision here is meant to incentivize acquisition of property, spur economic growth, they usually step in and either extend it or retroactively extend it, or both. So, we don't have a crystal ball, especially during an election year. It's very difficult to say whether or not something's going to be extended in an election year. Personally, I don't think it is this year. However, I think there's going to be enough interest, bipartisan interest, to spur economic growth, and there's going to be some horse trading there. But I would anticipate extension of bonus. And in the past, what the IRS has done and what Treasury has done is allowed taxpayers, if they do retroactively extend it, to file method changes to catch up the missed bonus depreciation. And again, that's with a Form 3115, and they waive scope limitations to allow taxpayers to do that.
Okay. So let's assume worst case scenario, when we run it out, it phases out 20% a year. And even now, when we're only allowing 60%, what should taxpayers be doing to maximize their deductions?
Yeah, I think there's a couple of things taxpayers should be doing. First of all, watch your place in service dates, right? Make sure that you're placing property in service when it's ready and available for its intended use. And again, we can get into that maybe in a different episode. But that's important. Scrub your fixed assets. Depreciation is one of those methods that the IRS allows taxpayers to go back and change their method of accounting with a Form 3115. Usually an automatic Form 3115, and catch it up in the current year. There's really no need to amend. So look back into prior years. Have you missed depreciation before? Have you missed bonus depreciation before? Is there the ability to maybe shorten the recovery period of some of your assets? So scrub your fixed assets. And then just a basic blocking and tackling in the current year additions. Have you done a cost segregation? 60% bonus is better than no bonus. So any basis that you can segregate into a shorter life not only will shorten the life of that, but it will also give you the ability to take bonus depreciation on that asset. So all of these are basic tax planning ideas that taxpayers should keep in mind as bonus keeps scaling down during the next couple of years.
And so you mentioned on doing a 3115 if you've missed some bonus depreciation, but you have to elect in or out a bonus depreciation each year, and you can't fix that. So the presumption there is that you've not elected out a bonus depreciation in any of these years, and you're fixing your lives, right?
Right. So, really the fix is that you've done an impermissible method. You've taken depreciation without, taking bonus depreciation in a given year. And you're then going back and you're fixing and catching up that missed depreciation in a prior year. So you're going from an impermissible method to a permissible method. The important thing there, because I feel this question all the time, Sean, is do I need to amend my returns to fix that? And the answer to that, in most cases, right, there's certain cases where it's not, sure, but in most cases, it's an automatic method change that gets attached, that Form 3115 gets attached to your current year return, and you can catch up those missed deductions in your current year return.
Okay. Well, this has been great. Anything else you want to add, Ralph?
No, I think just, again, we can talk about it in another episode. I know we will, but keep in mind of those place in service dates. Make sure you place property in service when you should, right? Take depreciation when allowable. And also look at cost segregation and other tax planning ideas to ensure that you optimize your depreciation in the current.
Okay. Well, thanks for watching. Until next time.